In this presentation, I'll be looking at materials, means, and yield variances. If this is your first time of coming across my channel, or if you have not subscribed previously, please click on the red subscribe button. Besides it, you will see a notification bell icon. Please go ahead to click it so that you'll be notified whenever I drop a new video. If you are a returning subscriber, I say thank you and God bless you. Materials, means, variance. So when I was considering the materials variances, I look at the material cost variance. Material cost variance. I said the cost variance will be divided into two: the material price variance and the material usage variance. Price and usage variance. I said the usage variance will further be divided into two: the mix variance and the yield variance. Material mix variance and material yield variance. So my focus in this lecture is the mix and yield variance. Remember, I've told you that variance is the difference between the standard and the actual. The difference between the standard and actual is said to be the variance. So I want you to know that the material mix and yield variances are calculated if a product contains more than one type of material. Mix and yield variances will be calculated where the product contains more than one type of material, or where the materials can be used interchangeably. So that is when to compute the mix and the yield variance. Therefore, what do we mean by the mix variance? Mix variance. A mix variance is used to monitor the cost of materials. Mix variance is used to monitor the cost of materials. For instance, if more of an expensive material has been used and less of a cheap material, then the cost will be higher and the variance will be adverse. So I've told you that we use mix variance to monitor the cost of the materials. Therefore, material mix variance is the difference between the actual total quantity used. The difference between the actual total quantity used in the standard mix and the actual quantities used in the actual mix, valued at the standard costs. A mix variance is the difference between the actual total quantity used in the standard mix and the actual quantities used in the actual mix, valued at the standard cost. That is mix variance. So material mix variance. Material mix variance is the difference between, I've told you that variance is the difference between standard and actual. Therefore, mix variance will be the difference between the revised standard quantity and the actual quantity multiplied by the standard price. The difference between the revised standard quantity and actual quantity multiplied by the standard price. We are RSQ. RSQ is the revised standard quantity. The revised standard quantity. That is RSQ. Revised standard quantity. So this revised standard quantity is the product of the standard quantity and the actual mix. The product of the standard quantity and actual mix will give you the revised standard quantity. And the actual mix at the total actual input. Total actual input, that is input of raw materials, the total for all the components of material, the actual, you sum up the total input of materials used in production. That will give you the actual mixed. Then we now apportion it using the standard quantity. So that is revised standard quantity. Then the second one I'm going to look at is material yield variance. Material yield variance. Material yield variance. A yield variance measures the efficiency of turning inputs into outputs. It measures the efficiency of turning inputs into outputs. If the yield variance is adverse, it suggests that actual output is lower than the expected output. Where it is adverse, it suggests that the actual output is lower than the expected output. So, material yield variance. Remember, variance is the difference between standard and actual. Therefore, yield variance will be equal to the difference between the standard quantity based on actual production. The difference between the standard quantity based on actual production and the actual and the revised standard quantity multiplied by the standard price. Standard quantity based on actual production minus revised standard quantity. Revised standard quantity multiplied by the standard price. I've explained how to calculate the revised standard quantity in above. That is material yield variance. I therefore want to take question as work example. This question is obtained from ACCA study test by Kaplan. ACCA study test by Kaplan. A company manufactures a chemical using two components, A and B. The standard information for one unit of the chemical are as follows. The standard information for one unit of the chemical are as follows. You have material A, 10 kg at 4 naira per kg. Then this is the standard price and $10 per kg. The standard quantity is 10 kg. The standard price is $4 per kg and the standard cost per unit is $40. Material B, 20 kg at $6 per kg and you are given $120. The total standard price, standard cost is $160 per unit. I've told you that a standard is a unit cost concept, while budget is a total cost concept. In a particular period, 160 units of the chemical were produced. The 160 units represent the actual output. This is output. Using 1,000 kgs of material A. This is an input. This is the actual input of material A. And 1,460 kgs of material B. This is the actual input of material B required. Calculate the material usage, mix, and yield variances for the period. You want to compute the usage, mix, and the yield variances for the period. I've told you that material usage variance, material usage variance, I said it is the difference between the standard quantity based on actual production and the actual quantity multiplied by the standard price. The difference between the standard quantity based on actual production and the actual quantity multiplied by the standard price. This AQ is the actual quantity, SP is the standard price. This is standard quantity, BOAP, based on actual production. If you have watched my previous lecture, then you'll be able to understand the applications of all those variables or concepts. So now, what is our standard quantity? Remember, two materials were used. We have material A and material B. Material A and material B. So now, what is the standard quantity? Standard quantity of material A and that of material B. If you go through the information about the standard quantity of material A is 10 kg and the standard quantity of material B is 20 kg. 10 kg and 20 kg. I've told you that you have to weight it based on actual production, meaning that you have to multiply by the actual production. Now let's go through the question to find out the actual production. In a particular period, 160 units of the chemical were produced. The production, that is the output, the actual output, which is 160 units. That is the actual production. Then you multiply it by that. Multiply by 160, multiply by 160 units. So 10 kg multiplied by 160 units. That means the input expected to use is 1,600 kgs. And 20 times 160. 20 times 160. Then we have 3,200 kgs. These are the standard quantity. You now go ahead substituting into the formula. For the standard quantity of A is 1,600 kg as calculated. That of B is 3,200 kg. Minus actual quantity. You go back to the question to find out the actual quantity used in production. The actual quantity for material A is 1,000 kg and that of material B is 1,460. So you substitute for material A and B respectively. 1,000 kg and 1,460 kg. Multiply by the standard price. So how much is the standard price per unit of the materials? For material A, the standard price is $4 and $6 for material B. So we have $4 and $6 respectively for A and B. So $4 and $6. 1,600 minus 1,000, that will give us 600. 600 times 4. 600 times 4, that will give us 2,400. $2,400. The actual quantity you use is less than standard. That is to show that it is favorable. For material B, 3,200 minus 1,460, then you have 1,740 times $6. Times 6, then we have 10,440. 440. This is also favorable because actual quantity used is less than standard, so it is favorable. The total material usage variance. The total material usage variance now. Materials usage variance. So when you sum it up, so you have 2,400 plus 10,440. Then you have 12,840 favorable. That is material usage variance. Then the next one is material mixed variance. Material mixed variance. That is number 2. Material mixed variance. I've told you that material mixed variance. I said it is the difference between the revised standard quantity minus actual quantity multiplied by the standard price. Then that means we need to compute the revised standard quantity. Now let's compute our revised standard quantity. You have two materials, A and B. What is the standard quantity of the materials? For A, you have 10 kg and B 20 kg. So now our revised standard quantity. A standard quantity is 10, B is 20, total 30 kg. Now, how much is the actual mix? I've told you that the actual mix is the total of the actual input. Actual mix, I've told you that is the actual input. Now for material A, the actual input of material A is 1000 kgs and that of material B is 1460. So now to get the actual mix now, you sum it up. So we have 1000 kg plus 1460 kg. Then you have 2460 kgs. You now apportion this actual mix using the standard quantity. So we now have 10 out of 30 times 2460, and this one will be 20 out of 30 times 2460. For A now, 2460 divided by 30 times 10, that would be 820 kg times 20, then we have 1640 kgs. That is the revised standard quantity. Revised standard quantity. So now you now substitute into the formula. You know the formula, we said the material mix variance. We said it is the revised standard quantity minus actual quantity multiplied by standard price. Now, our revised standard quantity is what we have obtained above. So material mix variance now. Mix variance, we have material A and B. The revised standard quantity of material A is 820, while that of material B is 1640 minus actual quantity. The actual quantity for material A is 1000 kgs and that of material B is 1460, which is the actual input. So 1000 and 1460 multiplied by the standard price. The standard price of material A, let's go back to the standard information about standard. The standard price of material A is $4 and that of material B is $6. $4 and $6 respectively. So we have $4 and $6 respectively. So 820 minus 1000, then we have 180 times 4, then we have 720. This is 720. More materials were used than planned, that is adverse. 720 adverse. 1640 minus 1460, that is 180 times 6, that is 1080. 1080. You use less material than planned, that is favorable. So when you sum it up now, this is favorable, this is adverse, so that means you negate it, you subtract the adverse from favorable, then you have difference of 360. Since favorable is more than adverse, that means you still have 360 favorable. That means your material mix variance now. Material mix variance is 360 favorable. Now, having computed the mix variance, we therefore want to compute the yield variance. Yield variance. I've told you that material yield variance, number 3, material yield variance I said it is the difference between the standard quantity based on actual production minus the revised standard quantity multiplied by the standard price. We have computed our standard quantity based on actual production. We have as well calculated the revised standard quantity. Now, when we were calculating, or when we wanted to calculate the material usage variance, then we computed the standard quantity based on actual production. And we got 1,600 and 3,200 respectively for material A and B. So the standard quantity now, based on actual production, we have material A and material B. Material A 1,600 kgs, material B 3,200 kgs, minus the revised standard quantity. We have as well calculated the revised standard quantity. Our revised standard quantity for material A, we got 820 kg, and for material B, we got 1,640. 820 and 1,640 respectively. 820, 1,640 for material A and B respectively. Multiplied by the standard price. The standard price for material A, the standard price is $4, and for material B, the standard price is $6. $4 and $6 for material A and B respectively. $4 and $6. So, if you now have 1,600 minus 820, 1,600 minus 820, then you have 780. 780 times 4 times 4, then we have 3,120. 3,120. This is a favorable variance because less material were used than planned. Then 3,200 minus 1,640, then you have the difference of 1,560 times $6, then you have 9,360, which is also a favorable because less materials were used than planned. 9,360 favorable. Now, what is the total material yield variance? The total will be 9,360 plus 3,120 plus 3,120. Then we have 12,480 favorable. That is material yield variance. That is the material yield variance. I want you to note that when you sum up the mix variance and the yield variance, the total will give you the material usage variance. Let's try that. Material mix variance and material yield variance. For material yield variance, we got 12,000. Material yield variance, we got 12,480 favorable for the yield. 12,480 favorable. For the mix variance, we got 360 favorable. For mix variance, we got 360 favorable. 360 favorable. When you add the 360 favorable and 12,480 favorable, let's sum it up. 12,480 plus 360, then we got 12,840 favorable. 12,840 favorable. This is the summary. Then I've told you that this total will be the same as the material usage variance. Now let's compare it with our material usage variance from our earlier calculation. Material usage variance, and we got usage variance, material usage variance, we got 12,840, which agrees with what we have. So that is material means and use variance. My next lecture, the next part on material means and use variance shall cover the wastages of material, that is where there is a normal loss. So the treatment of normal loss on means and yield variances. So that is what I'm going to consider next. So please, if you have not subscribed, please don't forget to click on the red subscribe button so that you'll be notified, so that you will always receive notification whenever I drop a new video. Thanks.